Hello friends, we are Sahas Academy. We are presenting USD INR market price analysis. In this video, we will analyze price movement using technical and fundamental factors. This video is a part of India macro market analysis. So, let's begin. During the week, USD INR was traded range bound and looking for fresh direction. The currency pair moved in the range of 81.95 to 82.17. Fundamentally, India's external sector is on strong footing, with foreign currency reserves are close to $600 billion and current account deficit is falling on the back of rise in services exports. PLI-linked initiatives are further supportive for India's manufacturing sector and exports. This can be gauged from the rise in mobile phone exports from India. Further, soft commodities and crude prices are supportive for India's external front, as India is importing economy. Moreover, with strong growth fundamentals, where the large economies are facing with slowdown and recessionary concerns, Indian economy is showing strong resilience to global headwinds, and even economic activities has improved from January, as per the MPC minutes. This will make India an attractive destination for equities. Rise in equity flows is further supportive for the INR appreciation. Despite positive sentiments, we believe any sharp appreciation in the currency pair will be curtailed due to RBI's intervention in the market, as it will make Indian exports uncompetitive. Depreciating Chinese currency will put a cap on rise in the rupee. We believe RBI will continue to intervene in the market to buy dollar and infuse rupee liquidity in the system, which it will continue to mop up through variable reverse repo rate operations. In our view, this will push RBI to continue to maintain with withdrawal of accommodative stance. Technically, 81.90 is a support zone in the currency pair in daily charts. Break from these levels will take the currency pairs to 81.65 levels, which are also indicated by the weekly charts. On the upside, 82.36 is an immediate resistance. Now, let's move to dollar index. In weekly charts, dollar index is taking trendline support at 101.90 and snapped the 3 weeks downside move and closed the week at 102.90. Better spending and housing stats data provided the fundamental support to the index. Powell's remarks further fueled that rate hike cycle is not yet over. This indicates US economy is doing good despite some weak data in the past weeks. Labor market is continuing to show strength, though there are some initial signs of cracks in the strength of labor market. Technically, 101.95 will be a support with a resistance at 104.20. Now, let's move to crude oil. The rise in crude prices after the announcement of Saudi Arabia to cut production tapered off due to growth concern in China and Europe. News of Iran and US reaching an agreement on nuclear deal lead to fall in crude prices. Despite the news, it could not break support level of 70.63, as heard in the market that Iran's oil production and exports is at peak. Any relaxation on sanction will not have impact on supplies. As market digested the news of Iran deal, prices recovered back to 76 levels. Forecasts by China's National Petroleum's research arm suggests that demand from China will remain muted, and Powell's remarks of further tightening fueled recessionary concerns and led to sharp drop in prices to 72.11, where it taken a support at trendline and closed the week at 73.85. As per JP Morgan report, supply has rebounded and surprised to the upside from a number of sources, like US and other non-OPEC members. Technically, 76.50 is immediate resistance with support at 72.11 and 70.63 levels. Now, let's move to Bloomberg Commodity Index. Bloomberg Commodity Index has broken the channel's upper band on the back of stimulus expectations from China. Further, news from Russia to reconsider grain deal also fueled the rally in commodity prices. El Nino conditions will put upward pressure on food prices. Lower than expected lending cuts by China, fading expectations of fiscal stimulus to support economic growth in China along with global growth concerns, as major central banks are continuing to maintain hawkish stance, led to reversal in commodity prices. Though index traded below the support level of 102.27, it closed the week at the support level. We expect global growth concerns will continue keep a lid on any sharp upmove. Technically, 104.60 will be resistance and immediate support at 101.62 and 100.60 levels. So, here we wrap our discussion. Thank you for watching the video. If you have any suggestion or feedback, you can reach us at info@sahasacademy.com or visit our website www.sahasacademy.com. You can also reach us through social media platform LinkedIn, Facebook, Twitter, and Instagram. To encourage us to share more videos, please subscribe to our channel. Thank you. Disclaimer: this video is made for educational purposes. It does not constitute an advice. Please consult with your investment advisor before taking any investment decision.